Hey guys, Crypto here with a video tutorial on VeloData. I've been getting a lot of requests for this, questions on how to access VeloData and then also how to set up the dashboard the way that I have it in all my videos. So in this video, it's just going to be a tutorial to show you guys exactly how to set up VeloData step by step, as well as a tutorial on how I set up the dashboard myself. Of course, it's fully customizable, but if you want your settings the way that I have them so that you can follow along during my videos, then this video is for you. Let's go ahead and jump right into it. Let's talk about how to set up VeloData. So I'm going to go ahead and show you guys how to set it up from my home screen. I have a link to VeloData in my bio on my Twitter. This link right here, if you click on it, will take you to another page that allows you to go ahead and sign up for VeloData using my ref link. Again, if you guys appreciate the videos and you want to support, I really would appreciate using my ref link to sign up. And this will open up VeloData. If you see the screen here, you're going to go ahead and click on Open App. And then you're going to go ahead and click on account in the top right, and you'll get to the login or sign up screen. Now, either this is going to pop up as soon as you click on the link that I showed you earlier, or you'll have to navigate to the account tab here at the top right. And then this is going to pop up. To sign up, you just type in your email address, create a password, verify, and hit sign up. That's really all there is to it. It's free to access and free to sign up, so you don't have to do anything else after that. No need for a credit card or anything like that. I'm going to go ahead and log in, and then we'll show you guys exactly how I have my dashboard set up. Okay guys, so when you log in for the first time, you may see a screen like this that shows up. And this is a bunch of other tools and analytics that Velo has for anyone to use once you create an account. And a lot of useful stuff in here, aggregate open interest charts, you have basis, you have liquidations. But what I do is I go ahead and click on the top left menu bar here, and then click on chart, and this is going to bring up the charts on VeloData, and this is the screen that you guys are used to seeing in most of my videos. On the right hand side here, you have a bunch of different coins. You can search individually for a specific coin, such as Solana. I can type in Sol, click on that, and it's going to bring up Solana, and this is going to allow you to change the chart that's being displayed on the screen here. Now, when you first do this, you may just be seeing this one screen right here as such, and this is just going to be the naked chart of whatever you're searching for on this end, and we'll show you step by step how to add on all the indicators as I have them. So again, you can navigate through here, you can select a chart and save it as your favorite, for example, if you'd like. You can also go ahead and sort by the 24-hour change in price, or even the 24-hour change in open interest. So these are some useful metrics if you're trying to scan and see what's hot right now and what's been catching everyone's attention. That may provide some good trading opportunities if you can figure out what's trending and what's not. You can also go ahead and go on settings here, and you can adjust all these settings to decide what type of columns you want in the section that I just showed you. Now you can also add in the 7-day change, you can add in the 7-day high, the low, the 10-minute volume, you can add in volume delta, funding, and all kinds of stuff. You can also add favorite coins, you can go Binance only, you can create watch lists such as DeFi, layer 1, layer 2, metaverse, and you can fully customize each of these watch lists as well. Create new watch lists here as well. Now, I haven't done a lot of this just because I'm not super organized, but I know some of you who are would love utilizing these as well. So I'm just going to go ahead and save this. Notice that we've added on the 7-day change, and you can see here now that we've displayed the 7-day change in price. So this is a good way to identify what's been trending over the last day or days or even months based on what type of metrics you want to set up there. So pretty useful stuff there on the right hand side. Just like TradingView, where you have your typical trend lines, indicators, all your tools on the left hand side of this dashboard. This is going to work exactly like TradingView does. You have an object tree, you have the same exact setup as TradingView, you have emojis, you have all that good stuff. Now for the fun stuff, how do we add the indicators to this chart, and how do you get the ones that I'm specifically using? So just like in TradingView, up here in the top menu bar here, you have indicators and strategies. You're going to click on that, and over here you can start adding indicators. Now the cool thing about VeloData is it does have some of the indicators that you're used to seeing on TradingView, such as RSI, but it also has a lot of indicators that you're not going to find on TradingView. And these are the indicators that I use almost daily, the ones that you guys have probably seen in a lot of my videos. So this is what we're interested here in setting up. So I'm going to go ahead and set this up exactly how I have it set up on my dashboard, and we'll walk you through each and every one of the tools that I'm using. So first off, in indicators, the first thing that I'm looking at is funding, and you can go ahead and see that it's right there at the top, aggregate funding. So I go ahead and click on that, and this is going to show you a moving average, a weighted average of aggregate funding. Now, of course, you can go ahead and customize this by clicking on the bars here, and you can change the colors as I have on my charts. You can also change the inputs. So right now you can see that it's measuring the average aggregate funding based on Binance, Bybit, OKX, and Deribit. If you want to exclude or only include specific exchanges, you can go ahead and click on these and that allows you to edit the data that's being displayed here. You can change the way that it's measured. You can change the way that it's aggregated. Like you can go with the average, or you can go with an open interest weighted average. So there's a lot of settings and options that you can mess with here. For me personally, I believe I have it set for open interest weighted, and I have all 4 of these exchanges selected, and I haven't changed any of the stuff here. So the only thing that I've changed on my end is the actual colors that are displayed. As you know, I have the dark blue and the light blue colors here. So that is the first indicator that I have here. The next indicator that I have, which we're going to go ahead and add on next, is going to be open interest. So I'm going to go ahead and search for aggregate open interest. And you can see here that it is this indicator right here. I'm going to go ahead and click on that. And this is the open interest tool that I'm using. So I'm going to go back to Bitcoin here real quick. And again, the open interest, if you double click on it, you can see that I do use open interest from all 4 of these exchanges. So I have them all checked. The big important thing here, if you want to get it set up the way that I do, is make sure that you're measuring in terms of coins and not dollars. And I've previously talked about on Twitter, some of you may have seen, why I measure open interest in coins. And this is kind of a vital piece of information. A lot of people have the settings set to dollars, and this is going to change things a lot. There's a specific reason that I use open interest in coins. And that is because as price is going up and price is going down, even if no new positions are opened, it's going to shift. The open interest valuation is going to change. Why? Because the existing positions are increasing and decreasing in value along with price. So you may get a rise in open interest along with a rise in price, even if no new positions are being opened. And that's a little bit misleading, because the way that we use this to look for a buildup of new positioning. And if this is increasing but new positions are not being opened, then for the purpose of our use, it's going to be a little bit misleading. So if you go ahead and change this to coins, then this number will only increase when there's new positioning on positions. Because even if price goes up, if there's no changes in the amount of coins being opened in positioning, then the open interest is not going to fluctuate. And a good example is actually what we're seeing right here on Bitcoin. You can see price has been grinding up off of these lows, has made new local highs. Open interest has failed to make new local highs because there has not been significant new positioning here. However, if you were to view this in terms of dollars, you can see that we have made new highs. And that's solely because price has risen, and therefore the value of the current open positions has also risen, despite really not many new positions being opened. And that's really what we're interested in here. So key selection there in terms of settings. The view, you can change this. I have it set up as candles. I haven't really messed with the other views, but depending on what you like, there's different ways of viewing the same data. So you can change this if you like. I have it personally set up as candles, and I have the colors changed. And other than that, that is all I have adjusted here for the open interest indicator. So that's the open interest indicator. The next indicator that I have, aggregate spot volume. When it comes to volume, there's a few different indicators. There's the regular volume, there is aggregate volume, there's aggregate spot volume, okay? So these two look almost identical. What's the difference? Spot volume is specifically talking about spot, and aggregated volume is talking about perps, okay? So I have both of these on my chart. So first we're gonna go with the perps, and this is again perpetual futures that I'm talking about. Here's the aggregated volume, and you'll notice that on my chart I have a series of lines here rather than bars. That's because I've gone ahead and I've changed this to cumulative delta, okay? So this is exactly the way that I have it set up. Again, you want to measure in coins, not in dollars. And I have all 4 of these perpetual exchanges selected, okay? So view, cumulative volume delta, measurement in coins, and then style, of course, if you want to change the colors, you can go ahead and do that. So that is perp volume, okay? The next indicator that we have is the spot volume. I have aggregate spot volume here. Once again, I've changed this to be a cumulative delta. And here you'll see that you can measure spot volume in terms of both Binance and Coinbase. So what we're showing here is a combination of spot volume from both Binance and Coinbase. And this is useful overall if you want to see, again, total spot volume combined. But sometimes you'll notice that either Binance is really leading the spot drive or Coinbase is really leading the spot drive. In fact, if I turn on one of these, you can see that Coinbase has essentially made a higher high from this level, whereas Binance has been selling off recently. So that is why I like to keep them separate so that I can see which of these exchanges is the spot volume really coming from. So what I'll do is I'll have one that kind of combines both. That gives me the net effect. It takes the pluses and minuses from both Binance and Coinbase, adds them together, and gives me the difference. So for example, in this case, I know that the net buy pressure from Coinbase and Binance, the net cumulative volume delta has been positive since this level here. But if I really wanted to see which one is causing that positive skew, I can see here that it's actually Coinbase, because Coinbase has been rising while Binance has been falling. So when I combine them, I know that this slight skew to the upside is coming from probably Coinbase. So I actually have both of them on my chart individually. So I'll have this one set up to be just Coinbase. And then I will add on another window and I'll make this one exclusively Binance. Okay, so I go ahead and keep that one as Binance. Again, change this to cumulative delta. And then what I do is I combine these two panes together. So let's go ahead and make this one. We'll make the Binance one. We'll make it yellow for Binance. And then I'll make the Coinbase one blue for Coinbase. And then what I do, just so that I don't have too many of these windows open, is I go ahead and I go to this Binance one and I click move to existing pane above, and that will combine them into one pane. So then I know that this is perp volume, cumulative volume delta, and then this is spot volume delta, the yellow line being Binance and the blue line being Coinbase. So now I have both my individual spot volume indicators here for Binance and Coinbase on one pane. And I can actually see the right axis, as you can see, it's in blue. This right axis measures Coinbase. The left axis, which is in yellow, measures Binance. So you can measure both of the differences by looking at different scales on the left and the right for both of these indicators. Now, you can also, if you like, add on another indicator that combines both of them if you want to see the combination like I showed earlier. But there you go. Now we have funding, we have our perp volume, we have our spot volume separated by exchange. Let's go on to the next indicator. So the next indicator that I have is, of course, the perp premium. And I go ahead and type in aggregate, and you'll see here premium. And so I click on that. And once again, you have aggregated premium, open interest weighted average. I double click on this. And of course, I've changed my colors once again, but that's about the only difference here. Here you go. This is what I have. You have perp premium when the light blue is positive, and you have spot premium when the dark blue is negative. So this is the weighted average for the spot and perp premium. So now, guys, you have the chart at the top. You have open interest right below that. I keep funding at the bottom usually, so I'm going to go ahead and move that down to the bottom. Usually have my aggregated premium right above that, and then I have spot volume, and then I have perp volume, and there you have it, guys. That is my dashboard essentially, and there you have it. This is exactly what my setup is now, just with modified colors. So guys, that is the actual setup that I use, exactly the same that you see in all my videos, and now you guys can replicate that and follow along. Now let's go ahead and talk about, actually, I want to add one more thing. VeloData is free to use. I do have an upgraded account though. I'm not 100% sure, but there's a chance that the free version only allows you to have limited panes open at one time. If that is the case, I believe it's going to be 4. If that is the case, the indicators here that you'd want to remove would be the volume indicators here. The perp premium, the funding rate, the open interest, and the chart are probably the core that I use the most. And for someone who's new to this space, those are probably the most important things that you want to get familiar with. The volume indicators that I have here of cumulative volume delta on spot and on perp are a little bit harder to interpret and are not necessarily as useful as the other 4. So if you are limited for any reason, if the free version only allows you to use those 4 panes, I would remove these ones here and stick with the other 4. And of course, you can always upgrade. It's not too expensive to upgrade if you do really want to add more panes to the chart here. But guys, that is it for the setup. Now let's go ahead and talk about the actual indicators. I'll give you a very brief overview of what I look for. Again, we'll go into more depth in a later tutorial, but just to give you guys an idea of what these are. Again, open interest, for those that ask, because a lot of people do ask, it's a measure of the total number of open positions on these perp exchanges, the ones that we looked at earlier, right? So it doesn't necessarily measure the number of longs or shorts. It measures a combination of both. So if you have this rising, it indicates that there's a lot of levered longs and shorts opening. It doesn't necessarily give you directional bias. We can use some of the other data to kind of figure out if the positions that are opening are directional longs or shorts and what is more likely to be squeezed. But a rise here just means that there are players positioning on leverage, and it doesn't necessarily distinguish between longs versus shorts. And again, the idea behind this is that if we get a buildup in open interest, that means that there are leverage positions that can be flushed, right? There are liquidations that are more likely to happen. The higher open interest is, the more possible it is to liquidate positions, whether that be up or down. And the lower that open interest is, the harder it's going to be to cause liquidation flushes in either direction. So that's open interest. Over here, again, the volume indicators, this shows cumulative volume delta on spot and perps, of course, depending on which one you're looking at. And this just shows the amount of market buying or market selling that's occurring with either spot or perps. So if this is rising, it indicates that there's market buying. Again, this doesn't track limit orders, it tracks solely market orders. So if cumulative volume delta is rising, it indicates that there are market orders being entered here. If it's falling, it indicates that there's market sell orders. If it's rising, it indicates there's market long orders. Same goes with spot, of course, with relation to spot. If these are falling, it indicates that sellers are market selling. If this is rising, it indicates that buyers are market buying. Now, where can this be useful? Sometimes if you see, for example, both spot exchanges drifting lower, indicating that there's a lot of market selling going on in spot exchanges, but you see that price is not really moving down very much, it could indicate that there are limit buyers absorbing the market selling, right? So if you have a bunch of market selling and you're seeing a lower low here on the cumulative volume delta between one low to another low, but price has made a higher low between those same 2 points, it could indicate that despite all this market selling, price is failing to make a lower low. Therefore, there's limit buyers absorbing the selling, which is generally bullish. So that's how you use these indicators. Again, that's something that you'll get more familiar with the more that you utilize them and view them. It is a little tricky though, and I say that because there's a lot of nuance to this. You have to keep in mind that while these lines are on the same pane, there's different scales, right? Just to give you guys an example, here you have Coinbase that has been rising since March 20th, but the scale, how much has it been rising? If this has gone from approximately 10.97K to 19.97K. So about 10,000 Bitcoin of positive cumulative volume delta since March 20th, okay? For Binance, you can see that on the left-hand side, we have negative 80,000 Bitcoin here. And then today we're at negative 92,000. So you can see that there was actually 12,000 Bitcoin sold off over here versus on the right-hand side, the right axis, 10,000 Bitcoin bought. So overall, a decline in cumulative volume delta if you were to combine these two, right? Even though Coinbase has been essentially grinding up, the sell-off that we saw in Binance has actually led to a net negative in cumulative volume delta when you combine these two. So if I were to combine these two, what would we get? We'd expect us to be lower than March 20th. Let's take a quick look and see if that's what we get. And here you go. So we're just slightly lower than March 20th if I combine these two, right? So you have to keep in mind, you can also shift the axis and zoom in and zoom out, and that'll change the way that these lines look. You might have zoomed out on Binance, and then you like put these next to each other and say, oh wow, massive sell-off on Binance. Coinbase has been flat. But really, if you just zoom back in, then Binance can look as flat as Coinbase. So you really need to pay attention to the numbers here on the left and right axes to make sure that you're interpreting this data correctly. The same goes for the perp over here. You can zoom in and zoom out, and this can get flatter or steeper. So you really have to pay attention to the actual quantity of Bitcoin that is being changed here based on the axis over here. Now you'll notice the scales are all different. You see on Coinbase, the volume on the spot exchanges, the volume ranges from plus or minus 10, 20K. On Binance, it can get a little bit more than that because Binance tends to have more volume. But here on perp exchanges, you're talking about 615,000 Bitcoin versus 500,000 Bitcoin. A lot more volume gets driven through perp exchanges than it does through spot exchanges. So those scales and those axes are very, very important to pay attention to when you're trying to measure the difference in buying and selling amongst all three of these combined. So this is a little bit more complex, a little bit more nuanced, not nearly as important as the other indicators we're going to discuss today. Nevertheless, let's go on to the next indicator, perp premium. Again, this just tells you that currently spot exchanges are trading at a higher price than perp exchanges. And what this tells us is that there is demand for Bitcoin on spot exchanges. When there's a perp premium, it indicates that you have a lot of people buying Bitcoin on perp exchanges and paying a higher price for it than they would on spot exchanges. And typically this means that there's some froth in the market because people are essentially borrowing money to long Bitcoin on perp exchanges, and they're paying even more than what technically fair value would be, which is the spot price. So that's what perp premium is. And then finally, you have funding, which again tells you whether the ratio of longs to shorts on exchanges is skewed or more heavily in one direction or the other. Typically, that's what it implies. The reality is funding, it's a little bit complex. The idea is that perp exchanges are supposed to track spot exchanges, ideally exactly, right? In a perfect world, the price on a perp exchange matches the price on a spot exchange. But the reality is that perp exchanges are just the trading of perpetual contracts that are supposed to track the price of Bitcoin, ideally one-to-one, but they don't. So ideally what this does is when the perp price or the price of these perpetual futures gets a little bit far away from the spot price, let's say the perp price gets a lot higher than spot price, this indicates, first of all, that there's a lot more aggressive longs jumping into the perp exchanges, which is why the price is higher than spot. And what that typically means is that you will then see a positive funding rate, which means that those individuals that are currently in long positions on these perp exchanges have to pay a portion of their position to the holders that are short every 8 hours. And why is that? Well, the idea is that if you're having to pay to be long, then ideally some of those longs will start closing and some shorts will start opening to kind of force price back in line with what it's at on the spot exchanges, right? So if Bitcoin is trading at $10,000 on a perp exchange and is trading at $9,000 on a spot exchange, that means that the perp price has gotten out of touch with the actual price on spot exchanges, which is at $9,000. So in order to fix that, you get this positive funding rate that forces those that are long on perp exchanges to close their longs by selling, and those that are short on perp exchanges to add on to their shorts, again by selling, to hopefully bring that price of the perp exchange at $10,000 in line with the spot exchange at $9,000. And the opposite is true when funding is negative. When funding is negative, you have shorts that are paying longs. And again, this is typically when there is a discount to spot or the price gets out of line with spot exchanges. And now you have price trading below spot exchanges. So to bring the price up to where spot exchanges are trading at, you will then typically see funding go negative to basically encourage people to long because now they're getting paid to long, and discourage traders from shorting because they have to pay to short. And so then the short sellers will then pay to the long holders, ideally increasing the amount of people longing and reducing the amount shorting. And that ideally forces price back up to match the spot exchanges. So funding is a way to kind of keep the perp exchange price in line with spot exchanges. And typically when funding is negative, it's bullish. And typically when funding is positive, it's bearish. But again, as I've previously talked about on Twitter and in prior videos, positive funding becomes the norm in very bullish markets. So it's very rare to see negative funding in very bullish markets, because when the markets are so obviously bullish, people are simply ready to pay more and pay to have leverage positions open, because they know that the markets are so bullish that they don't mind paying every 8 hours to keep their long positions open. And so typically in very, very bullish markets, funding will stay higher and stay positive much longer than people are used to. So that is a very brief breakdown of all of these indicators, guys. The best way to start using these indicators, understanding them and making use of them, is to follow along with my videos, keep these charts open, pay attention to the metrics as they develop along with price, and start putting things together. Start noticing how price moves and how these indicators change based on price movements up or down. You can use the lower time frames, specifically like the 1 minute and the 5 minute, to see direct interactions with price and a lot of these indicators. Just to give you guys an example, I can see here that as price rose on this leg, you can see here the corresponding open interest also rose significantly, right, relative to this move. This tells me that there's a lot of directional longs opening up on this rise. And then you see that as price started to fall, open interest continued to fall. Over here with this price rise, we have a decrease in open interest. That tells me that you have shorts that are covering, right? Shorts are buying to close their shorts, which is why open interest is decreasing as price is moving up, because they're buying, forcing price up. But at the same time, when they buy, they're closing their short positions, which causes open interest to fall. So these are the types of things that you can kind of gather from the changes in open interest and price as you view them. And you'll start noticing trends, you'll start noticing interesting metrics and things showing up here the more that you spend time on this stuff. Again, if you want to understand how to utilize these with actual price action, how to make actual use of them in the markets when it comes to trading, again, follow along with my videos. I talk about these almost in every video now when I do an update because they are so relevant. But that's it for this video update, guys. Again, if you enjoyed it, please like and share. Use my link to sign up for VeloData if you want to support. And that's it for this video, guys. I will catch you guys in the next one.